244%. That's the increase in the median sales price of homes sold since 1990, according to the most recent Fred data. It makes you wonder if buying a house is even worth it for most folks with the state of the current housing market. And I am so excited to talk about it because this is a decision that can make or break your financial life, especially if you're making it early on. We're gonna walk through how to know if you should buy or rent with the current state of housing, and some of the trade-offs with each of those decisions. The median sales price of homes in the US has increased 244% since 1990. Over that same time frame, the median household income in the US has only risen by 180%. And despite recent construction booms, the US is still facing a significant housing shortage. We're talking about a deficit of almost 5 million homes based on a US Chamber of Commerce report. Add on top of that some of the highest mortgage rates we've seen since the very early 2000s, and this is having a massive effect on young Americans' ability to buy homes. The average age of a first-time home buyer in the US right now is 38 years old, a full decade older than the average of 28 in 1990. Homeownership has long been considered a pretty seminal stepping stone in the financial lives of young Americans, but now that goal seems to be getting farther and farther away, with folks having to now even stretch their wallets just to make the down payment. Factoring in things like closing costs and the unforeseen expenses of owning a home, we have to ask the question, is it even worth it? Well, to answer that, what we have to do is actually a rent versus buy calculation. This exercise can do a lot of the legwork in determining which path may be the best for your situation. Now, for this video, we'll be using the rent versus buy calculator from the New York Times. It does require a subscription, but there are plenty of free ones out there. NerdWallet's is actually pretty good. So let's run the numbers on a real-world rent versus buy scenario using current market data. According to apartments.com, the national average rent for a 2-bedroom apartment in the US right now is approximately $1,900 per month. While this number will vary significantly based on location, with major metro areas being much higher and rural areas likely being lower, we're going to use the national average for the example. To properly assess the buying side of the equation, we need to determine how much house a typical American household can afford in today's market. We're gonna use our home buying calculator available at moneyguy.com/resources. And to do that, we need 3 key variables: income, down payment, and interest rate. For income, let's look at some current figures. Fidelity's analysis of the Bureau of Labor Statistics current population survey found that the median weekly earnings in Q1 of 2025 were just under $1,200, which if you annualize that comes to just over $62,000 for individual earners, or about $125,000 for a dual earning household. With a fairly standard down payment of $20,000 and current mortgage rates hovering around 6%, we also need to think through private mortgage insurance, or PMI, since the down payment's less than 20%. Running these numbers through our calculator shows that this hypothetical household could afford a home priced at roughly $380,000. And this is within a relatively close margin of the current median sales price of a home, which is just under $404,000. Now, let's get back to the rent versus buy comparison. If we assume a 10-year time frame, and the average American moves every 7 to 10 years, and we plug $380,000 for the home price and 6% for the mortgage rate, the results tell us quite a lot. Assuming an 8% average annual investment return over this decade, renting actually comes out ahead by approximately $120,000 compared to buying. And I should note, neither Brian nor I own any rental houses or have any vested interest in pushing people towards renting instead of buying. We're simply following the numbers and doing the math. This calculation accounts for various factors including home appreciation, rent increases, inflation, the tax benefits of home ownership, and the opportunity cost of tying up capital in a down payment rather than investing it. While $120,000 might not seem monumental over a decade, this amount in your 30s or 40s can significantly accelerate your path to financial independence through the power of compound growth. It's worth noting this outcome is heavily influenced by today's interest rate environment. If rates were to fall, they would need to fall to approximately 3.5% for buying to become financially superior to renting in this scenario, if we're just looking at the math. This demonstrates how crucial the interest rate component is in the housing equation, a factor that many home buyers just overlook or ignore when they solely focus on purchase price. Just to further illustrate how massive a role interest rates can play in a mortgage payoff, with where rates are today at around 6%, you will have only knocked off about $58,000 of principal over that 10-year period. However, this analysis doesn't tell the whole story. Home ownership offers several financial advantages that aren't immediately apparent in a simple calculator. For instance, homeowners enjoy greater protection against things like inflation or rising living costs because they have fixed-rate mortgages, while renters could face annual increases that could potentially outpace wage growth. Homeowners with fixed-rate loans maintain consistent principal and interest payments throughout the entire loan term. Another big benefit is building equity. As you pay down your mortgage and as property values appreciate, you're actually building wealth in your home. However, there is an important caveat. This equity isn't exactly liquid unless you sell the home and downsize to free up the difference. If you sell your home only to purchase another one of similar or greater value, all you've done is transferred equity from one illiquid asset to another illiquid asset, not actually creating any spendable gains for you. This cash flow constraint is especially problematic if your housing costs consume too much of your income. We generally recommend that housing expenses not exceed 25% of gross income, yet many Americans stretch far beyond this because they want to purchase a home in a desirable area. When housing costs eat up monthly margin, you have less capacity to save, and less capacity to invest, and less capacity to build for retirement, and less capacity to handle emergencies, or you have less capacity to enjoy life's experience. It drowns out all the other financial areas. This phenomenon is what we call being house rich, life poor, a situation where your net worth looks impressive on paper, but your daily financial flexibility is constrained due to the high housing costs. And as the old adage goes, you can't eat a house. But it's also important to note that beyond finances, homeownership offers intangible benefits that many folks find valuable. Establishing roots in a community, freedom to renovate and personalize your living space, and the emotional security that can come with owning your home. These quality of life considerations can often outweigh purely the financial calculations that many folks do. That's why the rent versus buy decision goes well beyond just numbers on paper. It's equally a lifestyle choice as it is a financial choice. The right answer depends on your personal values, your career trajectory, your family needs, and your long-term goals. What works perfectly for one person might be completely wrong for someone else, even if they have identical financial profiles. In navigating the rent versus buy landscape of 2025, we find ourselves at a fascinating crossroads where traditional financial wisdom meets modern economic reality. But the decision is not just about dollars and cents. Rather, it's about aligning your living situation with your broader life objectives. Whether buying makes sense depends on your timeline, the local market conditions for you, and your personal priorities. Some may value the freedom and flexibility of renting, while others prioritize stability and the potential wealth-building opportunities associated with home ownership. What matters most is making this decision intentionally rather than just defaulting to what conventional wisdom may say is the best answer for you. By understanding the true cost and benefit of both paths, you can choose the option that not only makes mathematical sense, but also supports the life that you want to build as you build towards your great, big, beautiful tomorrow.